Right. I think we'll get started today. Um, Thank you everyone for joining us today. We're joining Mormon Waller in this webinar with Corey Lake. If you have questions throughout the presentation, please put them in the chat and then we'll ask them at the end of the presentation. And I'm going to turn it over to Mark, who's going to give a little bit of an introduction on our speaker today.
Hey everybody, Mark Waller here, Mormon Waller CPAs. Thank you all for joining us today. We have a great webinar coming at you today. Before we dive into the topic, I want to let you know we have these monthly webinars, typically every last Wednesday of the month, covering a number of different topics that are related to the cannabis industry. We started these back in I want to say November, and have had a lot of really wonderful speakers. If you haven't been able to check them out or see them live, you can go to our YouTube page. We'll put it in the chat and send it out later. But it basically search for Warren Waller CPAs on YouTube, and you can find all of these webinars fully free, fully available, and all there for you to peruse. Especially here in Minnesota, which is our home state, we're really excited about what's happening here, and really excited to see who's looking for a license and who's getting a license. I really firmly believe having education available that's free, that is accessible for everybody, is just going to help the industry in Minnesota continue to grow and flourish the way it already is. So without further ado, I want to introduce my friend and our good business partner, Corey Lake. Corey Lake is the owner and CEO of Lake Group Insurance. He and his team do a fantastic job working with cannabis businesses around the state and really around the country, and working with businesses to help them get through insurance, which is never an easy thing to do in any realm, much less in cannabis. So we're excited to have him speak. And I'll be here to help answer questions as well. Betsy's here as well, but without further ado, I'd like to introduce Corey Lake.
Thanks, Mark. Thank you, Mormon Waller team. Glad to be here and talk about the very exciting topic of insurance in the cannabis space. Just a little more background on me. I started in working in the cannabis space in 2018, and then really transitioned over to full-time cannabis over the last couple of years. It is a interesting space. It's a dynamic space, and one that requires a lot of attention. So it's really been, again, full-time for me for the last 2 years, and continues to be exciting and interesting from my side anyways. We haven't seen anything like this in the insurance space since cyber insurance. So, unlike selling a business policy or a home or an auto policy, to have something that's dynamic, ever changing, I get to learn something new every day, and then working across the country has been a lot of fun as well. I got a call this morning from somebody out of state, and it was just another great reminder of how forward Minnesota is in our hemp beverage market, and how the rest of the country is looking at us as an example for the rest of the country. So that was kind of a fun thing. We will get started with the slides. I'm going to go through these pretty quick. I'm going to just kind of do a high-level overview. Insurance is not the most exciting topic, but it is very important. And it's something that's going to be, and we're all going to have to deal with it at some point. So all these slides will be available. I do have more information available. If there are questions, again, please ask them in the chat. I'll be happy to answer what I can. We do end up finding that a lot of the questions end up being legal questions, so I can touch on policy and policy language and examples of things that have happened across the country. I did spend some time this morning looking up some cases that have happened across the country. So I can talk on that a little bit. So if there are legal questions in between Moram Waller and myself, we can send you to legal counsel as well so they can answer those higher level what happens if questions. So let's go ahead and get started. The first thing we're going to talk about here is cannabis general liability. And let me preface all of this. So all of these insurances are typical for any business. It doesn't really matter what business you're in. We just put cannabis in front of it. So if you have a business, you're going to need general liability insurance. Where it becomes important for everybody to know is general liability protects against people coming to your business, slips and falls, third-party incidents, those sort of things. The big one for most people is you need a general liability certificate of insurance if you're going to go to events. So this is usually the first piece of insurance that we put into your business because of that certificate of insurance. If you're going to do a farmer's market, if you're going to do any of the cannabis shows or events, they should ask you for this certificate of insurance. So that's probably the biggest one, or the biggest thing that I hear the most. We can go to the next slide. Cannabis product liability. This is the second one. So products liability is basically what it says. It's somebody gets hurt using a product, or say they got hurt using a product. This goes to every single part of the vertical. So if you are selling a product, you need to carry products liability. When the lawsuit happens, they're going to come to the place where they purchased the product. If that person has handled everything correctly, or that company has handled everything correctly, then they'll probably go to the name that's on the product. So whoever's name is on the product needs to have products liability. If that's fine, so let's say you're just a name on a product and you're using a third-party manufacturer, all things being good in those two buckets, they're going to go to the manufacturer. And then the manufacturer also needs to carry products liability. So you can see how the lawsuit sort of goes from the person who has consumed the product all the way back to the manufacturer. The best example I can give on this one is we had an incident. It did not turn into a lawsuit or an insurance claim, but somebody had consumed a cannabis beverage who had been taking the medication that helps you stop drinking alcohol. So when you take the medication, it makes you get sick, basically, or you feel sick. In this case, the person had consumed a THC beverage, and the beverage had been on the shelf long enough where it started to ferment. That fermentation raised the alcohol content. He consumed the beverage. It made him very sick. All he did was make a call to, again, store to the label to the manufacturer. Everything was fine, but that just sort of gives you an idea of how that can sort of happen. We can go to the next slide. All right, property insurance. So there are two types of property insurance. Property can be the building, and property is also everything inside the building. So this, if you are renting or leasing, they may ask for some property coverage. What we're concerned about here is what the lease reads. And the lease is either going to read studs in or basically sheetrock in. So if it is the studs, you could be liable for anything that goes wrong with the electrical, plumbing, those sort of things. Usually a lease will be sheetrock in. So anything that's attached to the sheetrock, those are going to be the things that we're looking to insure. So the easiest way to look at this is when you're asked for, how much property coverage would you like? You take the box, you shake it upside down. Anything that falls out of the box is what we're trying to insure. So this is equipment. This is going to be your point of sale system. This is going to be any chairs, furniture, fixtures. It's also going to be all of your products. So anything that's going to be in the store, anything that you've manufactured and have on your shelves before that goes out. We can go to the next slide. Equipment breakdown, this is really for manufacturers is kind of the easy one, but there is some equipment breakdown insurance. So if you own a canning line and the canning line goes down and it bottlenecks you for a couple of weeks, there is some insurances in the space to help with those sort of things. You can also see in here for stores and that sort of type of business, security alarms, fire detection, computers, telephones, those sort of things as well. Computers is going to be a big one. If your computer goes down and you can't use the metric system or whatever system that the OCM decides that you need to use, that's going to end up being important. If your alarm system goes down and then there is a break-in, something like that, there's some funds there for you. There's some coverage there if something like that does happen. Power outage is the big one. So especially if you are a cannabis manufacturer and if you got humidification going or some sort of drying process, and all of a sudden those things go down and you lose that yield, this could end up being a big deal. Next slide. Excess risk is pretty simple. This is just extra insurance. So on a base level, you're going to have called $1 million to $2 million of coverage. This would just go above and beyond that. This is important for liability risks, on-premise consumption risks. It's not necessary, but it sure is a nice to have, and it's a relatively inexpensive coverage in comparison to the rest of them. And I will do a little bit of talking about the pricing once we get through the slides here. Next slide. Workers' compensation. When do you need workers' compensation? I get that question a lot. You only need workers' compensation when you hire your first employee. It is the only insurance that you are legally required to carry. And that's today. There may be some stuff that the OCM defines that they think you should carry. I don't know that they can legally ask you to carry it or not, unless they say you can't get a license if you don't have these things in place. So those are things that I'm watching out for. I haven't seen any language like that yet. However, workers' compensation is the only insurance you're legally required, and it's only when you have your first full-time employee. So this does not include the ownership. You could have 30 part-time employees that you don't need to carry workers' compensation for in that sort of instance. It is the least expensive and highest output insurance. So this would be if somebody gets hurt or the owners get hurt on the job, it will pay for your medical, anything to do with your medical issues that you have. Great example is I know a lot of people are manufacturing gummies or whatever, and there's equipment involved. I had a client who almost lost a tip of their finger. It ended up being fine, but it was for them. They went, oh, we should probably purchase workers' compensation. So we're working on that right now. A lot of these things are learned, through loss, and we hope to prevent that. But obviously, at the same time, I do understand that everybody is starting businesses here. So figuring out ways to sort of get you from point A to point B with the least amount of pain monetarily is something that we really strive to work on. Next slide. On-site consumption, well, obviously big, big, big in Minnesota. This has been fascinating. This has been one of the most interesting insurances that I've had to deal with. Gram Shop is the name. I didn't come up with that. Somebody else did, but it follows the Dram Shop policy. So this is for people that are consuming on site. It is new, where we have approximately 4 carriers today that offer this insurance. One of them is new. 3 of them have been doing it for a while. The limits on these policies are really low. The average alcohol or dram shop policy gives you $1 million of coverage. The average gram shop policy gives you about $100,000 in coverage. We can get up to $300,000 in coverage. That's what we've seen so far. This is obviously one of the probably the most looked at policies that I deal with today because it's happening across the country. We are now seeing that, as I spoke to earlier, that Minnesota model be pushed out across the country. So I'm getting calls from every state saying, hey, how do we do this? Is this a thing? This is happening. How do we deal with it? We're still seeing restaurants in Minnesota sort of come around to this as well. And I get calls from cities and city officials and municipalities trying to also figure this out. So this is probably one of the most dynamic insurances. The other thing that I can say about this is that, in the 2 years now that Minnesota, just under 2 years that Minnesota has had on-site consumption, we haven't seen any issues. We haven't seen any issues in Minnesota. We haven't seen any issues across the country. Gram Shop compared to Dram Shop is about 3 times as expensive. So the hope is that soon enough we'll be able to see the sort of sweep across the country, and then those prices will come down. Insurance functions on both the amount of policies sold and the data that's given to them. So on one side, it's great that there hasn't been any losses. On the other side, they really need those losses to understand the risk. So at this time, nobody really wants to be the first one to go through an on-site consumption issue. So the prices are remaining pretty high. Next slide. Executive liability, D&O, and EPLI and crime. So these are actually different. So you've got directors and officers as for your investors and stakeholders. And that is basically for once you start fundraising or you create basically a chart of directors and officers, and that basically protects the investment and then any sort of disputes that happen inside that executive group. The EPLI is employment practices liability. This is, discrimination, harassment. This is works with your HR department essentially. And then crime is inside crime, crimes that happen inside the business. So employee theft, employee dishonesty, forgery, robbery, those sort of things. Each one of these is a different coverage. They don't all go together. It just happened to fit on one slide, so I did it that way. All of them are important, especially the crime piece. I can give you a personal example. I owned a music store for 20 years. I had an employee who ran my online sales, and he figured out how to ring up eBay sale, and then he would grab a different item of the same value and would take that item. So he would end up sending the item to the person that they purchased on eBay, but what he rung up was the actual an item of the same value. So when we went to reconcile the books at the end of the night, the books would reconcile. because we weren't doing full inventory. We were just looking at the numbers. We sold this much in these ways, and this is how much money came in, and it made sense. It took about 8 months to finally catch him doing that, and the loss was substantial. He had done that a lot. So this would have absolutely, it did actually help with that loss. We did have to do a big forensic computer dive, and that was costly, but we did end up at least recouping some of our money. Next slide. Auto, so this is exactly what it says. So this is going to be both for obviously delivery, that sort of stuff. We've got two things, hired and non-owned. Hired is going to be coverage for employees if they rent or lease or borrow a car for the business. So if you send somebody to a convention and they rent a car, this is going to be that insurance. The non-owned applies for employees using their own car, cash drops, delivering product, those sort of things. So it is additional and it's additional coverage above and beyond their coverage. But as soon as the employee says, I was at work, that's when this insurance is going to be most prevalent. Not super expensive, but very important. Next slide. Crop insurance, it's exactly what it is. This is a moving target. There's some crop insurance available. Hemp is actually an easy one to do. There's some indoor, some outdoor. Not a lot of payout on this. It's got to be pretty specific to what happens, but it is available. It's very expensive. But at the same time, if you're growing 5,000 square feet and you're going to lose that amount of money, the payouts are pretty extreme. So the cost also follows, what the risk is as well. And it's expensive upfront, not expensive if you have the loss. And that's something that we're learning, that as soon as we do have a loss and you realize how expensive it is to deal with the loss, now that upfront cost doesn't seem so bad, but we've had to go through a lot to figure that sort of stuff out. Next slide. Builder's risk is if you're going to build a building. This is pretty simple. It covers your materials, building construction, that sort of stuff. This is one of those things that they may require you to carry if you're going to build a building. This is not very expensive, but very important. Next slide. Cyber insurance, I talked about a little bit. This is going to be anything that happens online. This also covers things like, court representation, liability of losses, fraud, extortion. So this is somebody who breaks into your system, shuts your system down, and says, hey, for $100, I'll release your information. A lot of times this will also include forensics and those sort of things, which ends up being very, very important. You got to know why or how they got into the system. But this can also be very, very costly as well. So, the other thing that it can help with is also sort of the mitigation, meaning you have I believe it's a legal thing where you need to tell all of your clients that you've been breached. And when you do that, we seem to see a 20 to 30% decrease in those people coming back. So there are teams that will help you sort of create a narrative to help make sure that you don't lose those clients, because you do have to tell them that you've had a breach and that their data may have been compromised. I guess I'm not going to call it a nice thing, but one thing is we see this a lot now. So people are getting more used to it than I would say 10 years ago when we kind of started doing this sort of stuff. Next slide. Surety bonds, inland marine. We'll start. Inland marine is just your goods in transit. So if you are, moving a semi-truck load of beverages or gummies or flour, inland marine coverage is when your goods are in transit. So think of it like FedEx insurance on a package. You can do one of two things here. One of them is the carrier company may offer some sort of coverage for you. So you can use their coverage if you're not doing it very often. Or they may already have some in place. So this is going to be in that contract that you end up signing. Or if you are doing it quite a bit, this is going to be a much less, more robust coverage than something that you could get from a FedEx or a US Postal Service, something like that. Again, using my own experience, we had an inland marine coverage for shipping guitars all over the world. Way less expensive than buying the FedEx coverage every single time we sent out a guitar. The surety bond is something that you may or may not need. There are states where they require a surety bond. This is basically saying that it's a financial guarantee that you're going to perform according to the laws, basically. So I guess the big example that maybe some people saw or didn't, but Donald Trump needed to get a surety bond, and it was something like $300 million, and he couldn't get one anywhere. Finally, somebody did step up and do it, but it's basically, if you don't perform, this bond is going to kick in and take care of whatever the bond is for. So this can affect different license types for growers, cultivators, dispensaries, and retailers. And again, some states do require that you pick up a surety bond, and this is really, again, just going to be it's a security for any of the financial stuff that's going on. Next slide. That's it. I was going to touch real quick on just, I again looked up some stuff this morning about some actual cases that have happened in the cannabis space. There really isn't a lot out there as far as insurance issues that have gotten taken to court that have become issues. This seems to still be a very, very low risk proposition. The things that we do see are not different than we see in any other business. We talk about break-ins, we talk about armed robbery, we talk about fires and grows, all of those sort of things. Again, not different than we see anywhere else. It seems like we've done a pretty good job of mitigating sort of the risks. I still think that we may be overdoing it in a lot of places, but I would think that if it continued down the path that we're on, insurance premiums are going to come down drastically over the course of the next 5 years, which is great, but we'd still need more information to be able to do that. So if you guys have any questions, please let me know. Happy to answer what you got.
Thank you so much, Corey. We have a couple of questions in the chat, so I'm just gonna share those. And if you have questions and you haven't typed them in yet, please do. Corey, how do you think that rescheduling or descheduling will impact this business?
Yeah, that's been very interesting. Rescheduling isn't going to do much. So for insurance, we've got two types of insurance companies. One of them, we'll just say that they're global, and then the other one is more regional. The other insurance company is actually called an MGA. So we have insurance companies that have created just cannabis insurance policies. We have other insurance companies that insure all sorts of different risks, but have added cannabis into their mix. And then we've got global insurance companies that just aren't interested. So rescheduling doesn't move the needle for the global insurance companies. The reason is money laundering. And it's not really the insurance companies, it's really the banks. So if we descheduled and that came with the Safe Banking Act, that might move the needle, but not a lot. Complete descheduling opens everything up. All of a sudden, banking opens up. That's going to help. Insurance companies have what are called reinsurance companies. So it's the insurance for the insurance company. The reinsurance companies have been the ones that have really dictated the terms on how the cannabis insurance world functions. So they're really setting the rules. One of those rules that happened right away was you needed to have a license. So when I first started doing this and CBD was a thing, the first question that I would get asked is, do they have a license? I would say, no, you don't need a license. And they would go, well, we can't sell you insurance without a license. And eventually it grew big enough to where they were like, well, CBD is okay. And then we got into low dose THC. Same thing sort of happened where it was calling the insurance companies. As soon as we used the acronym THC, all of a sudden it was a red flag for them. They're like, yeah, you need to have a license. I said, well, we don't need a license. So it took some time, but now obviously we've got coverage. So that's kind of the process on the descheduling or rescheduling. We hope that it does something, and we hope that the Safe Banking and Safe Insurance Act follows either one of those two things.
Absolutely. We have kind of a specific question here about crop insurance.
Yeah.
Is there coverage for biomass delivery, storage, and processing? For example, if you were to receive a crop delivery and the testing determines that the crop has mold and it can't be used, is there insurance for those situations?
Yeah, well, yeah, now, I mean, and this is going to sort of get into the legal part, and the best example I can use of this is that I'm going to use beverages because it's a little bit easier to sort of explain. The question will be is, when did that happen and how did it happen? So we've got to find out who the negligent party is. And one of the most recent things that I was dealing with was, and we've heard about it, beverages exploding on the shelves. And what ends up happening is, I'm just the person that created the beverage. You're drinking Lake Group Insurance beverages, and I've got a third-party manufacturer. And we go through the formulation process with a formulator who's, the world's best formulator, but we've used, fruit and sugar. And we go to the manufacturer signs off and says, great, we're going to use this formulation, looks good. They manufacture the product. I buy a semi-truckload of product and it explodes. The question now is, why and who did it? So what we do is we have to go and get the beverages tested. And then if we can figure out, it was an ingredient, we can go back to the ingredient supplier, and that ingredient supplier will say, yeah, we sent you bad monk fruit, and, that's our fault. And then they would put that into their insurance. So what we do is we run into this issue where it doesn't happen that way. The formulator will blame the manufacturer is going to blame the formulator, and it just goes into the circle. So to bring that around to the question, if the product is moldy, the questions are going to be why, where, when, how. Did it happen in transport? Did it leave the facility before moldy before it even got onto the transport vehicle? So there'll just be some questions. The answer is, yeah, there's going to be products coverage for sure. I mean, as long as you're carrying it, and theoretically there should be coverage for it somewhere. It's just whose coverage does it does it actually land on is going to end up being a question. And most of these experiences, especially if it's moldy product, something like that, it's going to go right back to the manufacturer, and you're going to be able to tell pretty quickly, just through a little bit of science, you'll be able to go, oh yeah, this was grown this way, or this happened in the drying process, and they'll be able to figure it out. And you'll be able to go back to the whoever sent it and say, hey, you sent me a bad batch, and hopefully they'll make it right.
Okay, thank you. Is there a ballpark on what to expect for insurance premiums?
Yes. Tough question. The answer is yes and no. So insurance is done on a rating system. The easiest way to look at this is annual sales is a big part of how they rate insurance. If you do $100,000 a year, your insurance is different than if you're doing $100 million a year. Just to use the low dose market, because that is, I guess, what we have the most, I have the most information on. Generally speaking, each line of coverage is about $3,500. So the general liability and products liability, they do package that together. That's about $3,500 to $4,500. And these are minimum premiums. So this is just where it starts. So then every single slide that I showed you, not excluding the one with 3 different coverages in it, I mean, if you think of each one of those line items as about $3,500, and again, this is the low dose market, you can kind of get an idea of where it's at. And again, I can share this information with you so you can sort of do the math. When we get into adult recreational, what I tell everybody is you just add a 0 onto everything. So that general liability and products liability is now $35,000, which sounds like a big number, but if you think about the product that you're bringing in, what your sales are going to be, your estimated revenue, all of that sort of stuff, now you understand kind of the trajectory of, and there is some math too that I can share as well, where it's like $1.50 for every $1,000 you make. So again, if low dose market, we see sitting anywhere from beginning year of $150,000 to maybe $250,000, and adult rec, you add zeros. You think of that as maybe a $1 million first year and hopefully a $2 million second year, something like that.
Thank you. Who is monitoring companies to make sure they're compliant with insurance regulations? And what percentage of current hemp operations are currently compliant, if you know that?
Yeah, well, and compliance, 2 different types of compliance, I think, is what the questions are there. So compliance from the insurance side, and this has been interesting to listen to sort of the OCM and what they're, not specifically Minnesota, but just in general. We have, insurance has a more stringent compliance conceptually than any of the Office of Cannabis Management does. And there's going to be different types of compliance. So if you are let's say you're going to set up a grow operation, you're going to have a couple of different compliance people come in. One of them is going to be your building code compliance. So they may say, your drain's in the wrong place, your bathroom isn't ADA compliant, that sort of stuff. So you need to move some things around, or you need to do these things in order to get up and operating. The other one is going to be, products compliance, those sort of things. It's really up to the insurance agent to explain the expectations of the insurance company, and then to make sure that you are compliant with those things. Does that happen? I mean, not really. It will be really a much bigger deal when we do get into adult rec. That's something when I do an adult rec or a medical facility, I go to those places to make sure that they're saying what they're saying is true. And then, none of these rules are hard and fast for insurance either. So things like we want you to have a caged back room that you can take all of your products and put it into a locked environment. We want you to have an 8-ton safe that's bolted to the ground. If you say that you have those things, we're going to, say great, and your insurance premium will reflect that. If you say you don't have those things and you're not going to do those things, your insurance premium is going to reflect that. Easiest example here is the plugs for your car or the app on your phone when you're driving your car, so they can see how fast you're driving if you apply your brakes too much. If you apply for that, you get a discount on your insurance. If you don't receive that discount. So there are some things that are I guess, have a little bit of wiggle room, but the more compliant you are, the easier it is to deal with the risk at the end of the day. So there's going to be at the end of the day, there'll be a couple of different compliance people. A great insurance agent is going to come out and learn your operation at the end of the day. So hopefully you get somebody that feels strongly about what you're doing, really wants to learn and understand your business, comes out and helps you navigate through that sort of stuff, can tell you what's important, what's not important, where they see the risk in your particular facility, and help you guide you through the process.
Corey, do you have any other tips for folks who might be in the application process or getting started or thinking about that process now, in terms of insurance?
I don't think that there are any insurance questions on there. Insurance always seems to be the last thing that people think about, and it is one of your largest line items. So the only thing that I would say is the tip would be to call myself, call another cannabis insurance company, and get some rough numbers for your business plan. And that's really about the extent of where you sort of need to be with that at this point that I'm aware of. I think there will be some insurance stuff coming, but I just haven't seen anything yet. Unfortunately, I'd love to see more of it, and I've absolutely offered myself and my services, my company services, but it doesn't seem to be a thing quite yet.
Well, that's all we have for questions. Thank you so much. Mark, is there anything you'd like to say before we close out?
Nothing in particular, just, thanks so much, Corey. Thanks for joining us. Like I said, Corey and his group do a fantastic job with insurance. Insurance is especially important to protect financial assets. So as the accounting team, we really rely on making sure that our cannabis clients have strong insurance policies to protect everything that they're building. So definitely highly recommend working with Corey on that regard. Certainly, if you have any questions for us along the way, as the social equity application period has officially begun today. For those of you who've been verified, please feel free to reach out to us. We'll be pushing out essentially a little guide for that attachment L later this week. That is the section of the application that pertains to accounting and tax. And if you have any further questions, or if you even need some help filling that part out, please let us know. We are happy to help. And this is our way of trying to give back, especially on the social equity side, where we feel really strongly that that's a key component of making sure that the law goes through in a good way for the whole state. So that's all I have. Again, thanks so much, Corey. Thanks, Katie. Thank you all for joining us, and have a great rest of your day.
Thanks, everyone. Bye.
Thanks, team.
Thank you.